Hello, savvy investors! Welcome to Christine's Finance and Investment session, where we delve into the wild world of ETFs. Now, for those of you who enjoy sleeping through financial seminars, an ETF, or exchange-traded fund, is essentially a basket of assets that you can buy and sell on an exchange, like a regular old stock. Think of it like a pre-made party platter of investments, except instead of questionable shrimp, it's full of stocks. Today, we're diving headfirst into the wonderful, or perhaps underwhelming depending on the day, world of the S&P 500 ETF. So what exactly is this S&P 500 ETF we speak of? In essence, it's like a miniature version of the S&P 500 index, which, as we all know, is essentially America's most popular publicly traded companies, all dressed up in their finest stock certificates. This ETF, bless its little heart, tries its best to mirror the performance of the S&P 500. It's like that friend who always copies your homework, but in this case, it's perfectly legal and encouraged. If the S&P 500 goes up, the ETF follows suit, like a loyal, if slightly uninspired puppy. And if it goes down, well, you get the picture. Now let's talk about everyone's favorite topic, diversification. No, it's not a new yoga pose. It's essentially the financial equivalent of not putting all your eggs in one basket, which, as we know, is a terrible idea, unless you're auditioning for a very specific egg-related reality show. The S&P 500 ETF, with its wide array of companies spanning various sectors, is like a well-balanced breakfast buffet for your portfolio. You've got your tech giants, your energy behemoths, and even a sprinkling of consumer discretionary companies, because everyone needs a little retail therapy now and then, even your investment portfolio. Thanks for watching. If you like our channel, please subscribe now, then you will not miss any videos in the future. Now let's talk about passive management, which is a fancy way of saying you're not paying some Wall Street hotshot in an ill-fitting suit to pick stocks for you. Think of it like this. Instead of trying to pick individual grapes from a massive vineyard, hoping you found the absolute sweetest ones, you just buy the whole damn vineyard. With an S&P 500 ETF, you're essentially investing in the 500 largest publicly traded US companies. It's like a greatest hits album, but for your financial portfolio. You're not trying to predict which song will be the next #1, you're just enjoying the classics. Liquidity in the world of finance essentially means how easy it is to turn your investment into cold, hard cash. And with S&P 500 ETFs, it's remarkably easy. Think of it like this. Selling an S&P 500 ETF is like trying to offload a slightly used Taylor Swift ticket. Sure, you might not get your initial investment back if the market takes a nosedive, but finding a buyer won't be difficult. However, if you try to sell your limited edition POG collection from 1996, well, good luck with that. One of the best things about S&P 500 ETFs is they're cheap to own. We're talking cheaper than a week's worth of coffee at your local artisanal caffeine dispensary. See, actively managed funds, with their fancy managers and their even fancier expense accounts, charge a hefty fee for their supposed expertise. But with an S&P 500 ETF, you're basically paying a very small fee for the privilege of tracking the market. It's like the difference between hiring a personal chef who insists on using saffron in everything and just ordering a perfectly acceptable pizza. Now, you might be thinking, this all sounds fantastic, John. Diversification, low cost, something called liquidity. Is this a magical financial unicorn? And to that I say, first, how dare you besmirch the good name of unicorns? Second, let's talk performance. The S&P 500 has historically returned about 10% annually. Not every year, mind you, because the market is about as predictable as a raccoon in a confetti factory. But over the long term, it's generally trended upwards. And since S&P 500 ETFs are designed to mimic the index, their performance tends to be pretty darn close. Not exactly the same because of those pesky fees, remember? But close enough. Alright, so you're intrigued by the idea of letting a basket of 500 stocks do the heavy lifting for your portfolio. But where do you even begin? Well, fear not, dear viewer, because the world of S&P 500 ETFs has options. Think of it like a buffet, but instead of questionable sushi, it's filled with, well, mostly reliable stocks. You've got your OG options like SPY, the grandpappy of S&P 500 ETFs, traded like it's going out of style. Then there's IVV and VOO, all essentially doing the same thing, trying to mirror the S&P 500. It's like watching triplets try to copy each other's dance moves. They're not identical, but the overall effect is, well, you get it. Now, before you dive headfirst into the world of S&P 500 ETFs, let's have a little chat about the potential perks and pitfalls. On the plus side, you're getting instant diversification. It's like that friend who always brings a variety of snacks to a party, a little something for everyone. Plus, they're generally cheaper to manage than your hedge fund-loving neighbor's portfolio. But, and this is a big but, remember, you're hitched to the S&P 500. If the index takes a nosedive, your ETF is going down with it. It's like agreeing to wear matching outfits with 500 people. Sometimes it's fashionable, sometimes you look like a walking, talking stock market crash. So there you have it, the what's what and the why's why of S&P 500 ETFs. Remember, diversification is your friend, passive management can be surprisingly effective, and no investment is entirely risk-free, even if it does involve a basket of 500 stocks. Ultimately, the best investment strategy is one tailored to your individual goals and risk tolerance. So, do your homework, maybe talk to a financial advisor who isn't also trying to sell you a timeshare, and make informed decisions. Thanks for watching. If you like our channel, please subscribe now, then you will not miss any videos in the future. Happy investing and see you next time.